Thank you, Marlon. Let me try that again. Happy New Week to you all. That should be better with the microphone on. And I was saying a whole lot of stuff, but forget it. Obviously, you weren't meant to hear it. It was all about me chasing the control panel around the room or around the screen, and I wasn't getting anywhere with it. And as you are now aware, I didn't have my microphone. Okay, Monday. We all hate Monday, don't we? Boomtown Rats, all that sort of stuff. Let's get stuck in, shall we? And think it's Thursday. I'm going to go straight to the pound versus the US dollar, which is not looking like it'll be tradable. But we've got 4 minutes to go. We shall see. All right, those of you who are not aware of what we're doing here, this is a trial of a system that I traded many moons ago, and I just can't remember the exact circumstances, but I'm getting very, very close to what it used to be, I feel sure. And for that reason, this is not to be traded with any great risk on the table until we say go. And yes, it is a proven system, or you can play around with it as you see fit and go from there. But essentially what we're trying to do is trade the breakout of Asia session. Now, what we do is take the third candle of the day on the hourly chart, which is this one, and that's where we begin, because that is Hong Kong Open. And what we're looking for is the low of everything that transpired since that time, which happens to be this bar here, and the high of everything that's transpired since that time, which is the current 1 hour bar sitting at DR1. Once we've done that, we look for the midpoint, and the midpoint is bang on here at today 1.12605. And from that point, we determine which way we're going to trade. In other words, which direction we're going to try and get the breakout headed, and then place an order at the midpoint with our stop loss either at the low or the high, and of course our take profit level either at the low or the high, depending on the direction that we're trading. Now, a few caveats on that. One of them is that if price is near the midpoint at the time London opens, we do not place the order. No matter what's happening there, we don't place the order. So this would need to get a wriggle on, get away from that midpoint before I would place this order. The second of those rules at the moment is if we are looking to trade short, in other words, if the candle closes above the midpoint but is bearish, same thing applies, don't take the trade. And if we're below the midpoint with a bullish candle, again, we don't take the trade. So what we're really saying is we're looking to trade against the momentum of the last candle of Asia and attempting to get a breakout from that. As it turns out, we're bang on the entry level, so I won't be placing an order unless, of course, this really gets a move on in the next few seconds. We'll just hang in here until it does, or until the candle closes, or London opens, same thing, and we'll make a judgment based on that. So if the candle was down here, for instance, we'd be looking to trade long, or if it was up here, or if the price was up here, we would be looking to trade short if we didn't have a seller bar. As it turns out, we are bang on the entry level, so we're bang on midpoint, and there we go. London is open, so there's no trade there today for me on pound versus the US dollar. Last week was a little bit boring on Friday because exactly the same thing happened. There was no entry, and was that Friday? Third bar, I think that's right. 1, 2, 3. Range was here to, I was looking to trade this on, yeah, it was there to there, and it was pretty much bang on the midpoint, so there was no trade. Thursday, on the other hand, was a cracker where we managed to get long with price way below the midpoint. We got taken in here and never looked like losing that one. That was a good one. Wednesday, I can't remember, but I think there was only one more entry, and that was a break-even trade for the week. So not too dusty last week. That was pretty cool. Let's hope we can get a trade away tomorrow and get some money in the bank early. That would be nice. Happy Monday, Paul P, to you too, mate. Hope you have a cracker, mate. Righto, let's, I've got a couple of orders in the market. Let's have a look at those. Euro Swiss is one, and I'm trading Euro Swiss short on the back of the weekly bars. Now, the previous week was a game changer bar suggesting that we trade short. We didn't want to take that one, and we were waiting for the pullback. Now, we actually finished up with an inside bar, which is not ideal, not because it's an inside bar, but because of the size of the dash thing. That said, the rule for me trading inside bars on the back of game changer bars is pretty clear. If I've got a primary trend or primary momentum that's suggesting that the market will fall or is in a downtrend, or, you know, the big boss, I call it. What's the big boss here? The big boss to me is this head and shoulders that continues to deliver. Every time it gets a rally, it sells, and that seems to be the case. Okay, we didn't get a big rally here, but the weekly bar chart or the weekly chart's telling me that we did get a game changer bar, so potential for this to go short, and the inside bar doesn't refute that. So entries below the inside bar, stop loss above it, and if you wanted to follow it, it's at 0.9643, the entry level. I've got a stop loss 151 pips above that, and I'm going to close half of the position at 88 pips, which is pretty much the low of that bar right there. Half off the table, stops to entry. This may not go much further, but that's the first thing that I do see. On the flip side of that, EuroCAD we traded last week on the weekly game changer bar, but we traded in the opposite direction, right? Because I felt that I had a far better chance of getting long here than I did getting short on that game changer bar, which, as I said at the time, not only didn't it get 50% back into this big bull bar, which of course set things in motion for a potential long and potential reversal, but we also got a retest of the trade line. So that set up a potential for A, B, C. Again, there may not be much in this one. We may only get to what is potentially a neckline on a head and shoulders if it forms. So same thing applies. I'm taking profit there, and I'm moving stops to entries to make sure I get some profit in the bank if it does in fact turn around and go south. So this is pretty much the same trade as it was last week. I haven't placed it yet. Well, I did. I placed it early this morning, but what happened was I updated the ATW software, and of course all my entries go down the SH12 chute. Righto, look, I think you can actually go break a bar on this if you wanted to, and go back 2 candles, because that's really what we're trading, still trading that bar. So I'm happy to do that. Just replacing last week's order at the end of the day. And 0.5% max on this one. As I said, if you get to TP1, which is 137.25, I would be removing half and moving my stop loss to entry, which is exactly what that's telling me, or what I'm telling it. Get rid of TP2, we'll deal with that down the track, and it's a buy. Now, I also placed on Friday, didn't tell anybody, which is probably a good thing at this point in time, but if you fancied the position, then you could probably place the order now if you so chose. I'm trading oil short. Placed this order on Friday based on the false break of not only this trade line, but the top of the descending channel, which is kind of two ways. This could go either way very, very easily, in my humble opinion, because we have had that strong break of the channel and the retest of the channel. So it's not beyond the realms of possibility that this will go long if price comes back to here. I favour the downside, and because we got that pretty clear false break of both the channel and the trade line, I'm happy to take it. First profit down here at monthly pivot, and at the moment we're testing the daily pivot, and I'm suggesting that it would be good if the daily pivot does what it does best and repels price at its first attempt and takes us back down to the monthly pivot, which has got what, a couple of weeks to go. So as yet untested, that looks attractive to me. The entry level is 85.65. Actually, I've been slipped into that by 4.3 pips. Love that. Execute the bloody thing properly, you fellows, friendly brokers. TP1's at 210 pips, and the stop loss is 414 pips above that. I won't try and even calculate that at the moment, but essentially we're trading this bar here, the retest bar, which has retested the weekly pivot as well. We've bounced off that. I've got every reason to believe that we will hit some resistance here and go short. So that's kind of why I'm trading that. As far as this week is concerned, weekly game changer bars were a few. EuroCAD was one. And I've spoken all about EuroCAD. We know that. So this is actually now in congruence with me, suggesting that we do go long. So I'm only too happy to do that. No need to talk too much more about that. Euro yen suggesting that we go long here as well on the weekly game changer bar. However, going long there is not an option for me at these highs. I'd have to get a pretty strong pullback before I did that. So that one's pretty much on a, I won't say permanent wait list, but it's going to be a while before I consider it. Pound, look, the pound, as I said yesterday, it's like a football with nails in it. It's very hard to catch. And pound versus the CAD is suggesting that we go long. Very, very similar to EuroCAD in terms of the chart pattern. Had that massive bull bar followed by an inside, well, not an inside bar, but a retest of whatever that level there is. I won't go out and explain it. The thing that I don't really like about this is last week's candle, whilst it was an engulfing bar, didn't really finish on a high note as far as I'm concerned. And I don't think I'd like to be trading that long at this point. But I'd like to see another pullback to the trade line to see if it can actually launch off that. So if I were to be looking at pound CAD, that's what I'd be looking for. Pound Swissy, not dissimilar, although it hasn't had a pullback. The reason I wouldn't like to go long here is not because we haven't had a pullback, but because we are at this strong support level, former support level now, expecting resistance. So again, pullback required before I'd go long pound Swissy. Pound yen, I probably don't need to explain that. This is right at the highs, so I wouldn't be looking to enter at that point. And that is the end of the game changer bars. There's one more, and it is a game changer plus bar, and it is Euro Swissy. Euro Swissy, similar to EuroCAD, gave us a game changer bar the previous week, and then this big inside bar. I'm not wrapped in the big inside bar, I've got to say, but that is exactly the same as Euro versus the EuroCAD. Not EuroCAD. What else did I show you? I can't remember now. Whatever it was. But it is very, very similar. Oh, we're trading Euro Swissy. Sorry, that's why it looks familiar, because it's Euro Swissy. So the game changer plus bar is in play. No wonder it looks familiar. My goodness. Okay, that is the weekly game changer bar list. And I have one other thing to mention. The indices are all very similar, but I have got a bit of a feeling for silver this week. And we had a feeling for silver last week, you'll recall, and we're looking to trade it short to the bottom of this range. But we needed to have a pullback, which just did not come. If you were fortunate enough to get in early on this one, on maybe that bar, happy days, you had a great week. I'm looking for exactly the reverse of that this week. Daily bar at the moment is pulling straight back into the range. I'd like to see that hit these pivots, the weekly, actually weekly and monthly, yes, then pull back off it and give me a higher low. So I'm probably talking Wednesday before I look to trade this, maybe even Thursday, depending on how price goes. Of course, if it continues to go short, then that setup will not come at all. And I may even look to play this in the opposite direction, that is short. This is kind of a setup that is very slingshotty. I'm just not sure I want to trade this short from here. If that were to be closing on the pivots tomorrow, $68, $68 rather, 68 pips rather, I would have to take profit there. I'll consider that. But it really has to test the pivots before I would do that, and then I would like to see that low high, as I said. So this is each way at the moment, but I favour the longs because we are still in that range. Maybe another false break, we shall see. That's the way I see it, Ash.
Looking good, mate.
Looking, buddy?
What's that, sorry?
Opportunity. It looks like opportunities.
Yeah, definitely opportunities today, mate. There's a potential opportunity with the FTSE, actually. It's opened up pretty hot so far this morning. So I'll quickly show you guys that, and and then we'll talk about the rest of the market and what might be happening today, and why the FTSE and probably the pound actually are potential opportunities today as well.
But just before you pinch the screen,
yeah.
Paul P has pointed out correctly that there is a nice double bottom sitting there on the weekly chart on Euro Aussie. Now, for me to trade that, I've got to see price pull back here. Maybe we've missed it, Paul. Maybe that was the one that we needed to trade, but definitely like to see a pull back here, and a decent one to give me a higher low. This has gone too fast. So for me, it needs to pull back and give me a higher low. Then it may be interesting. Aussie, really, really struggling, I must say. And pick a strong currency against it. I think you won't go too far wrong. Sorry, mate.
No problem at all. No worries. Just double checking this actually. Oh, 1 second. No, that's okay. Okay, so the trade on the FTSE is actually shaping up right now. Let me bring this over here. And the trade is really around this this daily pivot. You can see that there's it's for a long, and I think it's going to bounce here. I'm not sure if I'm going to get taken in. I'm a couple of pips off, but there's a little level down here. But I think it's going to bounce here. Now, the reason that I believe in the FTSE today is because the Chancellor is out with a speech today, and you know we know that Liz Truss is kind of like the U-turn queen, and she's basically U-turned on her Chancellor. So we got a new Chancellor in play now, and Jeremy Hunt is a lot more, I think, market friendly. You know that the strategy from Liz Truss and Kwasi Kwarteng was obviously sort of like, you know, completely bowled away. People just didn't like it. Now the FTSE is overall, like over the longer term, it's definitely, you know, we're looking for a short market. But I wonder whether we might get a little bit of a lift today, just off the back of the fact that we have got this new Chancellor, and also the kind of settling, you know, the sort of the fact that we might kind of get just a little bit of a settling in the market, and the fact that the market is so low. If we look at where the FTSE is kind of sitting, then we can talk about potential targets. Little start of an inside bar so far here on the weekly chart. Can it get back up here and possibly test this 200 period moving average on the weekly? Yeah, I think it probably could, and it probably will come down to, you know, what Jeremy Hunt comes out and says. but the gilt market has already opened up this morning with gilts going up and the yield coming down. Now that is kind of suggesting that the choking of liquidity is potentially not going to be quite as bad as people initially thought. Obviously, the Bank of England are going to need to come into lockstep with that. And I think on Wednesday we get CPI data. So I wouldn't really want to be in a trade for too long on the FTSE, but I think that there is a chance that we could get just a little bit of a boost. So that's why I think that there's a chance we could get some upside today. But also, when you look at where the market is down here, it is at these lows. You know, we have come down very, very low down here, and we are in this oversold territory. The volume profile or the volume bars here look pretty damning for some downside. It does need to break down this low for us to get sort of further downside. But we've got a decent amount of volume on this bar, equaled by a decent amount of volume on this bar. And really what this is kind of telling us is the market wanted to go long, but it didn't really have enough reason after Friday's data to go long. Does that change on a Monday? It can, you know, it can. We can actually kind of see almost a complete flipping of sentiment from one week to the other. And particularly now, NASDAQ as well, you know, when we sort of like thinking of risk sentiment, the NASDAQ might get a little bit of a boost just into earnings, you know, because we've got earnings season starting. Tesla and the like are out this week, so could be a fascinating week really for the US.
Tesla copped it again on Friday, didn't they? Or last week?
They did, mate, and they'll continue to cop it. I think a lot of these markets are going to continue to cop it. I think they're in. There's a lot of trouble. You know that the markets are in a lot of trouble down here. There's very little reason to be going long, except for the fact that we are at levels of potential support. And all I'm saying is there could be a couple of kind of like short-term dead cat bounces as we float into the next kind of data point. So
did Tesla not have a 1 million car recall as well, or something to the?
I didn't hear that. No, I didn't hear that.
Yeah, I did hear that.
Right.
But it's only something I heard. Whether it's true or not, I don't know. But yeah, that doesn't bode. That's probably why it crashed so dramatically.
Not boding well, mate. There's no question that the market is in all sorts of trouble, so it doesn't bode well. So I'm looking for a little bit of a bounce in the FTSE, not too much by any stretch, but a little bit of a bounce. You can see that it's actually coming under that daily pivot now, so it does need to do some work to kind of lift itself to the upside. Obviously, coming under these levels here would suggest that we get under that weekly pivot. It's time to get out. You know, definitely not worth messing about with that one. But let's see if we can just get a little bit of a boost today. Certainly early doors anyway. And what else? Oh, the pound. Yeah, now because the pound is in focus, I think this is going to be an interesting one. Now, I don't know whether it's going to be the right time to trade the pound. Before we get the statement from the Chancellor. But the pound, I think, is going to be fascinating over the course of the next 3 days, and actually could be the trade of the week. It could be the currency of the week. It might do really, really well. The CAD has come up as one of the weaker currencies, which why Paul P's Euro CAD I think is a good spot, good trade. But yeah, the pound could really struggle or do very, very well, and I think that CPI data on Wednesday could be quite telling. You know, it could be quite a significant number, depending on what it is, and depending on what the Chancellor comes out and says. With gilt markets going up and yields coming down, it suggests the pound at this stage might actually be a little bit weaker, but that could change on Wednesday. So we could see a couple of days of downside going into some upside. And if you were looking at the pound, let's say against the CAD as an example, because I quite like the CAD as a weaker currency this week, then where is it?
Is that based on COT or?
Yeah, it's based on the COT and the fundamental data, which suggests that the CAD could well be the weaker of the majors this week. The dollar still looks strong, but again, do you really want to be sort of trading dollars where the kind of dollar chart is? Very difficult. I mean, it's difficult on the flip. It's no different to trying to trade the indexes long. The indexes look like a long because they're in a buy zone. but they're really struggling. And it's similar to the dollar. The dollar looks like a sell because it's in a sell zone, but it's, you know, I mean, the fundamentals, seasonals, and COT data all line up for a long this week. But you know, I'm not sure whether I'd really want to take that one on or not. It's a difficult one. There's probably sort of there's a couple of ways you could trade this market right now, and one of them is to just ignore it. You know, you just don't do anything and let this whole thing pass. And it feels sometimes like you're always letting something pass, but we are in particularly extreme points right now. You know, with markets in buy zones but still going down, markets in sell zones but still going up. It just seems like we might be better off waiting for a bit of a turn to hold something over the longer term. But very difficult, mate. As I say, very tricky thing to try and get through. But looking at the pound, you look at it against the CAD. It would suggest that the price that I'm sort of picking out is along this horizontal level here, which is around about 154.50, maybe something like that. So a little dip into here, which is really the low on the 4-hour chart, the kind of the lowest point on the 4-hour chart. But a little dip into there, I think, could actually start to see some buying come back into play. And we might start to see.
That's what I was asking for as well.
Yeah, and I wonder whether
really like that it came off its high on Friday. Had it closed on its high on Friday, I think. Sorry, is it Friday? I was looking at the weekly chart. What happened on Friday? Yeah, I think. Although that's not a bad little pullback bar on Friday. I hadn't looked at the daily chart. It actually doesn't look too bad.
No, it doesn't look too bad at all, does it? It looks all right. Yeah, I think the pound is a possibility. I think, you know, that the currency that I'm looking at really is the pound, and I'm also looking at the CAD. Now, I thought maybe like the dollar looks very strong. Is there an opportunity on dollar CAD? May well be. You know, if the dollar's going to keep doing well, the dollar CAD actually looks all right. It doesn't look quite as well. It's also at a level of resistance, isn't it? So
it's having a heck of a time trying to get through that 113 handle.
Yes, it is, and it might be short term. You know, we might just see some upside for the week and end up bashing our heads above, you know, on top of this level here. So there might be sort of, you know, almost nothing to see here kind of thing. But with the move with the dollar, as I say, mate, it just makes it really difficult. It makes it really difficult. Very nervous kind of trading kind of going on here. So you know, not wanting to get too caught up into too many dollar longs. I'm not sure whether I take the dollar CAD, but pound CAD could be an option.
How much fuel can it take on board the dollar? You know, it's a skyrocket running out of gas, isn't it? Surely, you would.
Well, you'd think so. Yeah, you definitely think so. You mentioned gold and silver. You know, gold really struggling here. You know, and again, right on the level of potential support. Possible. You know, if you look at this on a daily chart, then well, maybe we're not far down enough yet. Maybe we need to test these lows again. But gold looks.
I actually think they're very significant, mate, because if that low holds and we put in a higher low, then that trend seems to be dubious.
Well, the downside.
Yes, because the trend is very clear and has been for 3 phases. There's 3 strong phases to the downside there, which took it to the neckline, which has been broken and retested. And now, as a technical analyst, I'm calling downside for sure.
Yeah.
But if it doesn't happen, then all bets are off.
Yeah, absolutely, and you know, it's tricky because you're bound to get some kind of relief rallies. You know, you know, we've seen them actually all the way down. You know, it comes down, it get this relief rally, it comes down, this relief rally comes down. Was this a kind of relief rally phase, and now we're going to kind of going down again? Is it a bottom? Possibly. You know, there's quite a few different things that could really happen here. So. I can't call along with gold, except for if you were looking at this over the longer term. And if you were building in a position, you know, the way that I'd be looking at this is to be watching this monthly chart, understanding that that it may well come all the way down to this, that maybe these levels here, it looks like it might well be through that trend line. So maybe not quite as low as that, but understanding that, you know, somewhere along this level would be the lowest you could get, and somewhere along this level is still quite likely, you know, around about the 1500 mark is still quite likely. So the one way that that I think you could sort of take a little bit of a punt on gold is to buy it here and understand that there's you're trading over a long time frame, and you might want to, like, you know, think, okay, this is an option, this is an option, and this is an option, and really that means for the whole position, you know, it's like building into the whole position, your stops are down there. Now, it doesn't look like there's going to be a lot of money in that kind of approach, except for if you get some upside that you can then start building into the position a little bit more heavily. So, you know, you could put in your markers initially to try and sort of get some exposure, because the dollar's coming down, no question at all. The dollar's coming down. Is it this year? Who knows? Is it next year? Who knows? But over the next 5 years, it's coming down. So you could actually start to trade these things and really have a long-term view on it. If you're not used to trading something like gold on an intraday basis, you know, I think you could actually look at these markets and take a longer perspective on them. And it might be the way to play it. You know, it might be more right now. It might be just a little bit too difficult to trade over the short-term basis. And you might want to sort of like start to broaden your time horizon and say, actually, if I give myself some room here to make a mistake, then I don't have to be frantically trying to find trades that are difficult, because, you know, the buy zones that aren't really holding up and sell zones that aren't holding up means that you could just get chopped around in these levels. As you said, very difficult for the dollar to get through those highs. But while it's finding it difficult, people are getting chopped around. You know, they're sort of trying to take a short on a short-term basis, but it's not working out. But what if you took a short on a long-term basis? Much more likely to work out. With the idea that if it pops up, that you've still got some room to kind of get into another short. Because as I say, it's coming down eventually. We saw it with Bitcoin. That, you know, the same deal with Bitcoin, never coming down, going to $1 million. Well, look at it now. You know, dollar looks like it's going to the moon. Maybe it's already arrived. Eventually, that thing's coming down, and there's a way to play it that's a lot safer than probably you know, we're probably appreciating right now, and that's probably into building to the position slowly.
Yeah, it's the one thing that does concern me with, you know, how long I've been singing that double top on gold, right?
Yeah.
It's the one thing that does concern me is that the dollar has to turn. And if it does, then gold turns with it, of course.
Yes.
So the gold to drop as far as I believe it can on that chart, which is around initially 1500 odd, but then down to 1200 odd, and they're probably similar to the levels that you've got in your chart there.
Similar, yeah.
So that's the one doubt that I have in my mind, is that the dollar has to weaken and has to weaken, and if it weakens before that actually occurs. But chart's chart, and you know, I remain absolutely focused on that double top. But gee whiz,
yeah,
it's been what, 7 months now since we've been able to trade a pullback.
Yeah, absolutely. Well, if you were, I mean,
unless you're trading shorter term,
on the bands here, and it's, you know, where is it? It's probably around about there somewhere. That particular range would potentially see us down into these levels here. So you know, as I say, Matt, I think it's okay to kind of get into gold, because the thing is with this as well is that you don't know when it's going to turn. You know, I was explaining yesterday, and I think I said it in the market preview. I was explaining yesterday that if the fundamental picture looks a specific way, you still can't really trust it, because firstly, it's backward looking. You know, the only real sort of well, there's a few sort of indications that tell you what's forward looking, and that's things like consumer confidence and business surveys and things like that. So the surveys are forward looking, but you can't really make trading decisions off surveys, because again, that's how people feel. That's not really sort of, you know, and it's still what they're feeling off data that is printed. And as soon as it's printed, it's history. COT data, it's history. It's recent history, but it's history. Seasonality, yes, it's, you know, it's kind of forward looking in a way, but it's still sort of like based on historical data. So the challenge is that you get into a trade because you think that the fundamental COT and seasonals are telling you something, and then a central banker or a government official, like we've seen in the United Kingdom, come out and say something really extreme, and the market just flips on its head and goes in the opposite direction, as we saw with the Australian dollar. No idea that the RBA were only going to raise by 25 basis points. No idea at all. I thought that they'd be going 50, 50, 50, no problem at all, and maybe even more hawkish. And the fundamental data suggested they could. Didn't suggest they would, but it suggests they could. So, you know, you kind of have this view on the Australian dollar being a strong currency, but actually, if the central bank come out and do something that is against what you believe, all of a sudden the trade flips in the opposite direction. And I guess that's the point with this stuff. And this is the point where I'm saying you could put in a marker. The way this market looks, it could come down to another level and another level. However, this level could still hold if Jerome Powell or a crony come out and say, actually, maybe we're going a little bit quick here. It only takes one person probably to turn the market in a head spin. So if that was to happen, then all bets are off and all the fundamental data and everything that's pointing in a certain way changes. The central bankers, unfortunately, aren't as transparent as we would hope. They're as transparent as for as long as they want to be, and then all of a sudden they flip. So they've said all along, we're not raising interest rates, and this time we're supposed to trust them. You know, and that's what makes the market a real challenge and difficult. You know, however, you can't really trade off the back of conjecture and what possibly might happen with too much confidence. But you can do it if you use some money management and, you know, ease yourself in. So I'm still quite interested in the picture here for gold. Probably similar for silver. You know, particularly where it sits. You know, we know that silver is on a level of support here. It's pretty strong as well. It might come down a little bit further, but these are buy zones, and it's just waiting for that buy zone to be given some fuel.
But I don't think they're long-term buy and holds at them yet. I'll say yet, because of the dollar. And, you know, short covering rallies, that's what's firmly locked in my head. So, you know, those potential turnarounds. And silver, as you saw my chart, I'm more than happy to trade it long until the top of the range, and then it's over. Then I just want to be out.
Yeah.
And wait for the short to turn up again. But in terms of, you mentioned central bankers, and you know, how intelligent are those central bankers? You know, we've been in transitory inflation for the last year and a half, or whatever it is.
Yeah.
And well, the Fed, to start with, where do you start with the Fed? They're now $31 trillion in debt. Whee! Nothing to worry about. Well,
you know,
you can never pay that back.
I was speaking to somebody last week, and it was a conservative counsellor saying to me that, you know, this is, you know, what do you think has caused this? You know, do you think it's the war and COVID? And actually, you've really got to go back to monetary policy. You know, they've caused
that's
it.
what they'll blame.
That's what they blame. Yeah, that's the rhetoric we're fed. But they have absolutely caused it. But what that does mean is that when you look at the dollar, because they've caused it, inevitably things are going to break. You know, in some respects, it doesn't mean it's going to fully break down. The system's going to crash or anything like that. But things are going to break, and things will break with the dollar. And the thing is, the dollar cannot stay strong as it is if world trade is going to expand, because the price of the goods that, you know, people are buying from the States right now are hyper high. And of course, you know, anything and right now the United States is able to kind of go out and get imports really, really low. They're really cheap for them. Well, that won't work. That cannot work where you have one power moving so far away from the rest of the planet, because there will be civil and government issues that will go and say, look, guys, you can't. This is just not sustainable. This is unsustainable. You cannot kind of like go into a world like this. And actually, it won't help them in the end, of course, because if they continue on, if it continues on this path, countries are going to go under and be bankrupt, and ultimately that it will pull the rest of the, it'll be like a house of cards, and every country will be in the same situation in the end. So I think that the Fed must be.
We've seen it before. It's only 14 years ago we saw it.
Yeah.
Wow, 14 years. I can't believe I'm saying that, but
yeah,
14 years ago we saw it tumble just exactly like a house of cards.
Yes.
And really the American government and the Fed, it's the emperor's new clothes, and they're just faking it until they make it. They're not going to make it.
Yeah,
they simply aren't going to make it. I think we should say good day to George.
Yes, let's do that.
It's Monday. Hey, it's George Day. Hello, George.
How are you guys doing?
Yeah, good, buddy. How are you?
We're having a good old chinwag here about the state of the world, mate.
Yeah,
we're going okay.
I can hear that. Excellent. Yeah, it's been an interesting morning. It wasn't Friday. Was it Friday? Thursday, quite dramatic, wasn't it?
Yeah.
Yes. Yeah. Well, I switched off pretty early, but yes, end of the week was interesting.
Yeah. Well, I mean, this is the thing, man. I mean, we've basically sort of had just a whole bunch of a whole bunch of numbers which stated that you.
I want to take it just now, if it happens. If I get a break beneath here.
We're on your order chart right now, mate. Your order ticket.
You can see this screen. Okay, so I'm on gold. 5 minutes. I'm not sure how to actually show both because someone has raised that, but I'm trying to take a short on gold. Just waiting to see.
If you want to close that number down.
Close the.
No, don't do that. Then you.
Don't necessarily sell it unless you want to.
Well, I'm going to place it trade. I'm just going to sell it market gold.
Okay.
Stop 1660. So I've done that. Now, how do I do that little trick? So I'm placing the order on other accounts that I've got here. So just give me half a second.
All right, mate. So guys, George has just gone short gold with a stop loss at 1660. He's gone in at market. If you wanted to follow that trade.
And it's I go in at 0.25% risk. That's I'm taking a reversal trade, so it's low risk. Just be cautious with that. So I'm gonna my screen there. So that's, I don't know if you can see it now. So I just sold at the market, then I put the stop up here. And the reason the stop is up there is just the measured move of this. So, if we get a sudden reversal, the bulls want to get to that. So I'll be happy to get stopped out there. Got a percent risks, and I'll just leave it and see. What I'm trying to get into is to see if the market gets down here. That's the low of Friday. And the reason for that, if I just pop up into the daily chart, so there was that whole drama with CPI on Thursday, and then there was Friday's candle, which to me is a follow through. So I think there's a higher probability of the bears trying to break beneath the low of Friday and to see if they can test the low of 2022. If they can and break beneath it, then we start to think about that other measured move. So that's why I took that earlier trade. Then I'm going to manage it and see if we get down there. If we don't, my stop is pretty wide. So, in at 0.25, I can just ignore it while I look at other things. All right. So that's a gold trade. Sorry, guys. I interrupted you.
Don't be sorry, mate. Trading's good.
Yeah. So I think from what I'm looking at in terms of all the charts, there's just a higher probability of a lot of selling off for today. So on euro, I've got a trade that I put in I sold beneath this candle here. So this is a 5-minute time frame. And again, because I'm taking a reversal trade in this market, 0.25% risk, and stop is up here, way up here on the measured move. So if we break out above this level, and if the bullish momentum is weak, in other words, we're getting reversals, a wedge top, double top, I'll leave it in there. And because it's a 0.25%, if it comes back and starts to go my way, then I can always start to build a position around it. So those are the two trades I'm in now. Euro, reasoning behind that, just this 2-bar reversal of the 20 EMA. This should just show on the 5-minute, give us a clearer picture. So on the daily, I'm trying to get into a break beneath that low. 2-bar reversal off the 20, one of the strategies that I'll trade if I saw on the 5-minute. So if we get down to that level, then I will be building my positions of what I've just taken off at the moment. So I think there's a high probability of us selling off. I mean, the bears may not get all the way to create a new low. They still have to get beneath, this low here, which was the Thursday candle that the bulls are going to defend. So we'll see what happens there. Then just have a quick look on daily.
Might just add that they're really somewhat correlated, aren't they? Both those trades, because
Yes.
they're both US dollar based.
Yes, so that's a good point. So if you're taking them, until I'm in profit, I'm going to keep my risk very low. So right now, I'm really exposed to the dollar at 0.5, which I can sleep easy for as long as possible with that. Then virtually all of the others, I'm going to look to see if I get into any shorts during the day. UK 100 just on the daily. That break beneath the low of Friday would be exciting for me if we get there and see if we get trades going in. S&P 500 on the daily. So feed I should have. It's a bit messy, so apologies. So that fib should only show on the 5-minute. Yeah, so break beneath that is my interest points beneath the low of Friday. So that will be the same also on the DAX, DAX 30. That reversal candle, double top, lower high from this wedge top beginning of the month, that for me shows that bears are strong. So if we get to try and take that low on the DAX 30, I'm also going to be going short on that. Whether it's an earlier trade that sets up or break beneath that in the pullback and test. And lastly, just a quick look at.
Cool with that. Something taken off there, George.
Yeah, so that's Hang Seng 50.
Ah.
Yeah, that's Hang Seng 50. And let's see what levels I've got here. So that was.
Wow. Well, that should help the FTSE, whatever's going on there.
So they got this level, I think, is a key level. This was a level on the US session. And we have to see if the bulls can break above that, because that created a bear breakout at the end of the US session. So if they can get above that particular level, then we kind of know the bulls are strong. We'll have to wait for a pullback, but they have to get over that. I mean, if we compress that a bit further, huge bear breakout, key lower high. So bears are going to be defending that strongly. That's what we got to wait and see if that takes off. So even on this market still, so we had a breakout beneath the low of yesterday, the low of Friday, earlier on the Asian session. Bulls came back, double bottom. So if the bears are strong, they will give us a pattern of sorts in here. And if I do see that reversal pattern, or that coming off this level, that's a pullback, breakout pullback. So the bears have to defend that level. So I'm still bearish, And if I see a decent enough pattern, I'll jump in and hopefully be able to build a position before we get down here. And reason for that on the daily for my bearish sentiment is this. Big bear breakout. Channel has been created already. And even if we kind of do that to the channel. So the bears are still in control of the market. That bounce off the 10 EMA. Remember I said I use the 10 EMA to indicate strength of a trend. So that bounce off the 10 EMA is just telling you that the bears who created this 4-5 candle breakout are still strong. So they are going to come in at some level to defend either the 10 EMA or the high of Friday's self, or anywhere in here. So I'm actively looking and waiting to see if I get an opportunity to go short here. Then I will do that. So that's kind of my bearish sentiment.
Yeah, no, understood, mate. No, but Jeff and I were talking about the kind of challenge at these levels, because we're sort of, we seem to be at buy zones in the market, but the market continues to sell off. That the index is gold and the dollar's at a sell zone, yet it continues to buy up. Do you feel like, particularly on working on short-term timeframes, that this is a maybe more acute period of trading than you've had, on a kind of how challenging it is than you've had for a while?
Yes, and the challenge is the price action patterns are the same. The challenge is the level of risk you have to take. I mean,
yeah.
I watched that whole CPI news and then the reversal. When you just look at the chart, you say, hey, fantastic, I can trade this and go long. But you go and measure risk. I mean, it's like 5 times the risk just to take a trade.
Right.
And you just say, well, I can't do it. The pattern is there, probabilities are in my favor, but I'm just gonna watch it go. There's no ways I have to put my risk, my stop at the correct level. So even my quarter risk, I mean, it would turn out to be 1.25 if I was to take the trade. So there's just so much price action drama, if I can put it that way.
Yeah.
And you just stand back and you just watch. So and it's really because we're at levels of support. I mean, you can spin through all the charts, levels of support where the bulls are in. I mean, if you look at the S&P 500, this level here, I spoke about that last week, goes back to 2020, which was this area here. That's the level that's been tested. Now there's huge forces defending that in terms of
wow. That's interesting, mate, because is that not the COVID high?
In fact, that's the high out of COVID, because the COVID low was here. So there is a COVID. Then we had that month's double bottom, double top breakout, and eventually broke out above it. So
right,
that's where we're at. So bulls are going to defend that, and bears want to break. That's why we have this huge volatility, and unless you really have deep pockets or are prepared to take. I mean, like I took that 0.25% trade. That's a huge stop to put in, but I'm comfortable with that. But you can't do that on any of the other candles. Even at a fraction of risk, you risk your whole account. So you just stand back and watch. But something good, put it that way, is going to happen. At some point, there will be a distinct breakout and things will kind of normalize in terms of how we can trade. And we say, hang on, back in a bull trend, or bears have now taken over. But this is what's taking place here. This is why we have all this exciting drama.
Interesting. You say something good's going to happen. In terms of a breakout, I agree with you. But in terms of the world and what's going on, it's hard to see, isn't it? It really is hard to see what on earth good is going to happen. Where's it coming from?
That's the thing. And in fact, if you put it in real life terms, it may not be something good, maybe something bad, right?
Indeed, yes. And isn't that generally what turns the market?
Yeah, it does.
It's generally bad, not good. Yeah, that's true.
Yeah.
So we're looking at something significant.
Something significant is going to happen.
Yeah.
And it's one of those things which you have to consciously say, like now, I'm only going to execute more. I can't go into this market greater than 1% overall of my portfolio. So
Yes.
I've only got a couple more 0.25 trades to put in. And then unless things are at break even at technical levels, there's nothing else to do, because it's just, it's just so easy. I think you said chopped out, to get chopped out if you're trying to get into this market. We don't have to. It will give us opportunities today, tomorrow, only halfway through the month. So
yes, that's a fair point. And actually, I mean, I was looking at this week, so I'm just watching this trade because there's a possibility of taking a little bit of profit here, but we'll come back. The seasonal bias is for a long right now. That's where we are, is that we are in a seasonal pattern for long side on the markets, and we've got earnings season as well. An earnings season might really sort of like drive things this week. If earnings come out better than expected, I think that's going to calm things down. So many things could calm this market down, and the market really wants to be calmed down. I think that's the other sort of aspect here. The market really does want something to cheer about. Could be earnings season, and as I say, it could be a central banker. Nobody knows where it could come from, and you could really get blindsided. And I guess really sort of because you are on the short term side of things, would you consider flipping and thinking about this market over the long term rather than the short term, because of because of the volatility aspect of it? Or is that just not the way you trade, and that's just not the way you trade?
No, that's not the way that I trade. I have to look at it every day. And the key consideration for me is if I take my early reversal trade at 0.25%,
yeah,
can I do that? I mean, if I was trying to take a trade here and at 0.25%, I can't take that because my account is just not big enough, then I'm not going to do it. So I'll just keep watching until I can trade the way that I trade.
Yes.
In the short-term time. So, you might go through the whole day on these couple of trades. That's perfectly fine with me. Because it will turn, it will come, stabilize, whatever we may call it. But so I just keep focused and zoned in. I use the long term just to get a sense of higher probability direction.
Yeah.
Like now, I'm saying on euro versus dollar, bear trend, looking to go short, and that's about it. I guess
that's the I guess that's what we're talking about, isn't it? Is that you're using the longer term, as I do, and I'm sure Jeff does as well, the longer term view to try and get an idea of which way the market's going. But there are certain times.
I think that's very true. Sorry if I could just interrupt there.
Yeah.
But you tend to use the long term forward as well as backwards, whereas George and I generally are using the long term backwards. In other words, historic data. You'll use historic data, but you're also looking for forward data, aren't you?
Yes, I am, because the way I look at the market is to sort of say, if this data is coming out this week, then the psychology kind of going into the week could be, for example, if there is CPI data from the United Kingdom on Wednesday, that's really significant. Is there a chance that the market trends before that particular data comes out? I mean, there's a chance, but what's the likelihood? And I'd say it's quite slim. And the reason I'd say it's quite slim is that after that data is released, it could go one way or the other. It could go in either direction. If CPI data comes out and is weak, the pound is likely to weaken, and the market, the FTSE might to strengthen. Whereas if it comes out hot again, then it's likely to strengthen. Now, of course, people will buy into that number and speculate on what that number is. But actually, it's that number which enables you to speculate on what the the interest rate is going to be, and that's the important one. So you can actually wait for that number and say, okay, buy the pound. It's over 11%. Buy the pound after CPI data's come out, because that suggests that in 3 weeks' time or whenever the next rate decision is, that they are going to be raising interest rates. So in that regard, I will assume a kind of range. And I will then look at the market and maybe trade it like it's going to be a rangy period for a few days, going into the period. So yeah, I will look at the data coming and figure out, try and think about the way that these guys are going to be thinking. The
market will react to it. Yes.
Yeah, because they're not gambling. The sort of the people that we're up against, if you like, they're not gambling. Yes, they are speculators, so they are speculating, but they're still sort of. If you look at CPI data, and case in point, the NASDAQ and the like moved on the day that CPI data came out, and it moved up. Everything else, but before that, it was going down. It was weak. Looked like it was going to crash down, but just before the CPI data come out, it started to move up. Now, the reason for that, in my opinion, is because if the CPI data was going to come out and be weak, then you'd really want to be on the long side on the NASDAQ. And you are in a really strong sell zone. So if you're in this really strong sell zone a really strong buy zone for the NASDAQ. If you're in a really strong buy zone before significant data, then you want to buy it. Because if that data works out, you're flying. If the data doesn't work out, you're in a relatively tight range. As it worked out, I mean, I don't know how we could have traded it. It was mental. George probably saw it as well. But the short-term timeframes on the Nasdaq during that CPI print was astonishing. They were astonishing. So trading it would have been impossible. But the philosophy is kind of that, is that way. And we are and it shows how extreme things are. And they are putting it down to basically robots kind of taking the positions, for the NASDAQ, and that's why we kind of got the volatility we did. But
and
that's
George,
what
that goes precisely to George's point. You've got to have your stops so wide in a situation like that.
Yeah.
That is the reward, the potential reward, even worth the risk? And that's the question that we need to ask ourselves.
Yeah.
And if you can't assess your risk, and those massive candles make it very, very difficult sometimes to assess where your risk is, because they'll go beyond where generally you would logically place your risk. So it just makes it really, really difficult when that situation's there, and that high volatility is very, very difficult to deal with on short-term timeframes.
Yes, it is. Incidentally, taking some profit on the FTSE. We have a little winner there. So the FTSE's popped to the upside. I think it could go a little bit further, if I'm honest. I think it's probably going to go to another potentially another 50 pips, but I'm sticking with the kind of the first contact philosophy. So profit taken on the FTSE.
Awesome. I like.
Just interesting before we go off. I mean, I'm still looking for shorts, so I'm gonna keep my eye on you.
Oh, me too, mate.
That is problem again is to stop. I mean, look at that measured move. If it keeps going against us, what are we talking about?
Do you know, I'm also looking at the shorts, George. You know, the only reason I took a long this morning, and I try and trade the FTSE at a similar time. I try and trade it the first hour. And the reason I try and trade it the first hour is there's the highest volatility of the day. People are sort of, particularly on a Monday, people are kind of coming in and they're sort of like trying to get their trades on. And what I look for in the first hour is something which is not necessarily with the overall trend. It's just a move. And the way the market was looking today, if you look at that is that a 5 or yeah, that's a 5. You look at that on the 5, and I was looking on the 15. That is moving up. That we were getting the kind of the bullish kind of behavior going into it. So I took the speculative move that we were going to be going a little bit higher. Now on top of that, we've got the Chancellor out today, and Jeremy Hunt as the new Chancellor is kind of thought to be more market friendly than quasi Kwarteng. So that was also in the favor of the FTSE. I saw the gilt market open up, and the gilt market came down while gilt market came up, which is the same as the Treasury in the United States, with gilts coming down, also bullish for the FTSE. So a few things before the market opened today suggested to me that we could get a little short-term bounce, and that's the way I trade the FTSE every day. What's going to happen between 8 and 8:15, or 8 and 8:30, or potentially 8 and 9? And that's my kind of trading zone. And it's not really relevant for the overall move as it would be now. You know what I'm with you 100%. I'm short FTSE, I can't say all day long, because between 8 and 9 I was long. But most of the day I'm looking for a short in the FTSE from here on in. But that first hour tends to be just a bit of an anomaly. It's sort of, and you'll see it in the US market as well. It can go one way, but then the overall trend will take grip later on in the day. So that's why I went long, but I am with you 100% that it's a short. I do wonder whether that trend line up there might get tested.
Yeah, that's exactly what I'm looking at there to say.
Yeah.
If I take
Georgia lower high gets you interested now. Now you've got your double top.
Yes, any lower high, I'm going to be very interested. Then I just have to see, there's a measured move, there's that trend line, there's a high of Friday. So my stop has to be somewhere within this zone. So I'm just going to keep my binoculars on this setup and see.
Yeah.
See what we get.
Yeah. Yeah, looks so the market's keen. I have to say, mate, the market is keen today. I don't know what's happening with oil, because you always have to watch oil if you're looking at the FTSE because of the Shell and BP. But Shell is currently up 1%. What's that, mate?
Oil is rallying.
Oil's rallying, which makes sense, And what you just saw with the Heng Seng as well, that suggests that maybe there's a broader picture of some market confidence today. So I have to say the FTSE isn't selling off right now at this particular level, which does suggest that we could go a bit higher. But as I say, Shell's at 1%, BP's currently sitting at 1.5%, and all the mining stocks are doing well so far today. So because of that, it does suggest that that the market's in relatively confident spirit at this stage. It could change, which is why I take profit now. But right now it looks relatively buoyant.
See, I mean, on Hang Seng 50, we spoke about this and that level from the US session, and
yeah,
the bears are defending that. So, if you were to ask me, the higher probability is that these bears who have defended that and given us a lower high double top,
yes,
so they are the guys controlling the market. So
yeah.
With this double top, again, just to Jeff's point, I'm now going to be looking to see what we get here, lower high, or even if we get a bit of a wedge top, 1, 2, 3, looking to sell, but stop. That's the issue with this market. Stop is a wide stop. Stop is a wide stop, but still, very bearish in my mind.
Yeah.
But to my mind, that chart's telling me that you've just completed a cycle as well, George. That W cycle is over.
Yes.
Yeah. Yeah, it's got to get through it, hasn't it? So then hit the next measured move.
Yep.
Yeah.
Yep.
So
I like it.
I don't know how long it will take, but I think there's some back to that thing, some nice things, good things are going to happen. For traders,
yeah, I agree with you, mate. Do you know what the other thing about, of course, the other thing about all this stuff is that if the dollar does weaken, or if we do get some indication that the dollar is going to weaken, everything's going to be relatively easy to get into. And I don't mean on the short. I don't mean on a with a tight stop. I'm still talking about nice wide stops just to get the thing started, because it's going to be like getting into first gear, which the car works hardest in first gear to get moving. So you can keep a nice wide stop and give yourself sort of like lots of room for fluctuations. But when it does start moving, adding to the position, I would think would be relatively simple, because the market has to turn. And the dollar's gone so far that all the other products out there, gold, silver, and the indices, if that dollar does, or when that dollar does turn, then they're going to go a long way, which suggests that trading on maybe phase 2, not maybe phase 1. Phase 1's going to be tough,
I agree.
as we've seen. But phase 2 looks like it could be relatively simple.
Yeah, because that's you're now in a trend, right? In phase 2, so it's not that phase 1 reversal where you try. Yeah, so yeah,
nice
so
if you can get them, but not easy to pick up often.
Let's hope we get one for Bali, George. You in Bali, George?
Yes, I'm in Bali. Yeah,
Amazing.
we'll search for them early and see if we can just bank it.
Yeah, let's see if we can get a nice phase 2 for Bali. That'd be amazing.
Timing might be pretty good, guys. Might be pretty good.
Yeah, it'd be amazing. Oh, do you know what, Jeff? I'm gonna miss you in Bali. I really am. I was thinking about it yesterday. It's not going to be quite the same.
Yeah, can you record something for us? At least we can play your music, your singing.
yeah, nice song.
I'll see how I go.
Okay, guys. Well,
I might have to be lubricated at the time, George.
Well, I don't think there's too much danger of that. So we are 9:05. We're 5 past the hour. Anybody got anything else they want to add, or anybody in the room actually that wants to kind of get in and come on screen? You are more than welcome to. But otherwise, I think we're winding up, aren't we?
I'll pinch the screen for 2 seconds just whilst they're thinking about that.
Done deal.
And of course, we've got to finish up with euro dollar as we always do, as we always try to do. And I've got to say, if you can pick a direction from here on euro dollar, you're a better man than I am, Gunga Din, because this is just crazy price action. The daily pivot is in love with price at the moment, or vice versa, whichever way you'd like to choose to say that. If I'm biased on euro dollar in any way, shape or form, I can't be, because we're absolutely in the middle of this channel and I've got no idea what happens next. Absolutely no idea. Therefore, I have to go back to the dollar index, and I keep saying it, we're stuck here at 113 and it just cannot get through it. Because of that, I guess I've got to favor the downside, but look what you've got here. You've got a high test bar, a low test bar, and a spinning top, all sitting on the one level. It's really, really difficult to say which way this goes next, but I'm biased short, and I don't really want it to go short just yet. I think the 119 handle, if I'm relating this back to gold, right, it's got to get to here, even up to 120 to challenge these all-time highs, and then gold is down to the point that we were speaking about before. So that makes sense to me, but it doesn't make sense right now because it's struggling to get through here. And look at that, it's just vertical. It's got to stop. It can't keep going at that pace. It just cannot. And that's what we're speaking about at the moment. It has to at least pull, but when I say has to, there's no such thing in financial markets as has to, but this is so close to has to that it's not funny.
Yeah.
And for that reason, I've got to be thinking, okay, we've put in, and I'll go a little bit tighter on that. We've put in a big bearish engulfing bar, and on Thursday we put in another selling bar there, which in essence has created a lower high. This looks a good target to me for the dollar index, and it's around about the 109 mark. But gee, you got to be patient because we're talking about 3-4 weeks away. That's into the second week of November before we get there. But it does look good to me. You've got a big bearish engulfing bar. You've got a retest of that level and rejection of that level, a third rejection of that level with that bull bar last week. On Friday. This may well be a sell, which then takes me back to the euro. But I can't do anything with that. The chart's just ridiculous. I can't trade here. So I'm going to have to pick something else. Maybe it is the pound, Ash. Maybe it's the pound.
Yeah,
okay.
Not a bad one to go for, mate, I don't think.
There's a sweet little slingshot scenario there too. Retest. All right, I'll have a good look at that. I'm not confident in either of those pairs though. the pound and the euro. I'm going to pick something else. Don't know what it is though. Nothing strong except the dollar.
Mm.
I trade the dollar short against the dollar.
Love it. Can't lose.
Maybe it's silver for the week. Maybe it's silver. We can buy silver this week. We've got to get it set up. That's all. There's about $2 available. Okay, that'll be my pick. Silver versus the dollar for the week.
I like it.
See if I can get into it.
Grand stuff. All right, guys. Well, let's wrap it up. Thank you as always, guys, for joining us. Really appreciate your company. Thank you to George, brilliant analysis, and thank you to you, Jeff, for being the trading buddy and the sound head, in the show. And of course, thank you to Marlon for looking after us. We will see you Thursday, right?
You betcha. We'll be here Thursday. George, what's happening on Wednesday?
This week is live trading profits, 6:30 p.m. Sing, 45 minutes.
Perfect. Thank you, mate, for coming in. Ash, as always, thanks for being my buddy. Everyone else who's joined, thank you for being our trading buddies for the week, and have a wonderful week ahead. See you later. Bye-bye for now.